Hi guys, Nomad here, you with the traders again. Nice to see you, nice to meet you all again. I hope you enjoy our channel, the traders. Me and Or here you can use in his videos to see how to trade, how to use day trading. We have our program also, and you have three great videos to your education. You can see my videos. I teach you more how to invest, how to analyze the stocks that you want, and to understand some feature and some other words that probably sound blur for you, but you know they're important. And today I'm here to explain you what is the dividend and what is the dividend yield. All right, and what is the dividend first? Let's first start with what is a dividend. All right, before I'm going to show you some explanation and some examples here on your finance website that I really like. I'll explain what is a dividend. So, a dividend, when a company finished their year, all right, let's say company did 1 million shekels, $1 million profit after tax. So the company can decide what they want to do, what the company wants to do with this money. She can take it all and use it as capital, right? And as capital, the company can use it for investments, to give only bonuses for the workers, made for the employees. Maybe to buy some new machine or buy some new technology or buy other company. She can do the company can do it can do a lot of things, and the company also can decide instead of doing all of it, or take 50% and do something one thing with that, and the rest of the money to give it as a dividend. What it means give it as a dividend? In all the owners, all right, let's call it owners of the company, get this 50% dividend, all right, if the company have profit of $1 million in 1 year and it decide to give dividend of 50%, it means that it will give $500 million to the shareholder. And if you are an investor that bought this stock, mean that you have shares, so you are a shareholder, probably a very small one, but still a shareholder, and you'll get part from this $500 million. All right, it was five. I thought it was one. All right, I said $1 million, so it was. You'll get part of the $500,000. All right, as your share. All right, if you are one of the owners or the controlling owner, which means that you are, let's say, holding about 30% of the company, for example, you'll get 30% of $500,000, which is nice. But if you are a small owner, small shareholder, stockholder, that no one really knows who he is, let's say you are holding 0.01% of shares of the company, you'll get 0.01% of the $500,000 that they give as dividend. All right. So first, to give dividends, it means that the company needs to have money. Money can come or from profits or from previous profits from other years. Maybe this year they lost money, but they have profits from other years that they can pay as dividends. Even though it's not really happening a lot, but it's something that can happen. All right, so let's look at some stocks that we know that pay dividends. All right, let's look at Microsoft first. Microsoft. All right. Well, Microsoft is a well-known company. All right, with a lot of years as a public company. Everyone knows it. It's a global one with a really high market cap, almost 1 trillion market cap, very high. And if we go here on the page in Yahoo Finance, we'll scroll down to the forward dividend yield. Alright, we can see that the dividend yield, first we can see that the company is paying dividend yield. Here we can see the date, alright, and here we can see the dividend yield. The dividend yield, it's mean per share, alright. If you are holding, let's say, 100 shares of Microsoft, you'll get 1.84 you'll get 1.41 for that dividend, right? If we said you're having $1 shares, $100 shares, you'll get as a dividend $1.41 in a year. By the way, some of the companies paying more than once in a year, some pay once in a year, some twice, some even 4 times in a year. It depends, but this means that you'll get 1.41% in a year. All right, that's a low rate, but you'll get it because it's a big company, a great company. They pay dividends, and everyone knows it, and you don't really have any risk here unless something will happen. You will. Let's check any other company. Let's check Amazon. Alright, I choose Amazon for a reason. You see here that it is written NA, which means there is no dividend. Even though that Amazon have profits, alright, have great profits, I guess. For in the last year, they have profits, and it's a big company. It's a gigantic company, actually. See, they don't pay dividends. Why is that? Because they believe that they need to use the money to invest in new ideas, in the company itself, to grow and to be bigger than they are now. So they don't pay dividends because they use the money for growing, for investing, for other use they have in their plan, in the directors. So they don't pay any dividend. By the way, if you'll see also Tesla, I know that they don't pay any dividend because they don't have any profits, I guess. Let's check Google. See, Google don't pay any dividends. Which company we know that for sure that paying dividends? Let's check General Motors. You can see they pay 3.9. Alright, it doesn't really matter. Alright, it just means that you'll get 3.9 on your money to your pocket during the year. It means that even if the stock will drop few percent, not a lot, but few percent, there is this money for you to back your losses. So this is something to consider if you don't like to take risk. You can put some of your money on pretty safe companies that pay dividends. In other countries, I know that banks are really safe, so it's great to buy bank stocks and use it as dividend stocks for your pocket. So check some other companies like that and decide what is better for you. By the way, you can probably be an investor that don't want any dividends. You prefer that the company will invest in their facilities, in their growing, and you'll see it. You'll see the profit by their rising share. All right, it means that if a company will invest in some other or buy other company that is a competitor, it might the stock rate might raise in really a great percent, which will be more than the dividend. Let's check, let's think about if Citigroup will buy some small companies or some small bank, but that is just in Texas, and they have a pretty great number of clients. And Citigroup are not really big in Texas. So the thing that will happen is that the stock will raise in about 10%, just throwing numbers. But it means it will be better than just getting some dividend of 5% in a year. It really depends. It's something that you as an investor need to consider what you prefer and how high is the risk you want to take. So this is what I have to say about dividends. If you have any other questions, please email me to the email down there in the about. You can open and send me an email. If there is any other explanation that you want to get, also email me or comment below, and I promise to answer it in a new video. So I am Noam. We are the traders. I hope you enjoy. If you are, please subscribe here on the left, and